Welcome back to Investing Talk Podcast. Today we're taking a close look at Etsy for you. You shared some information about this pretty unique e-commerce company, and we're going to unpack what makes it tick, its recent moves, and maybe what's on the horizon. Our goal here is really to distill the key insights so you can understand what's most important without feeling, well, overwhelmed by all the data.
And we've got quite a bit here. Information covering like a general overview, recent performance, financial health, how it stacks up against competitors, some recent developments too, even a detailed due diligence report from early 2025. It is a lot to go through. So where do you think we should start to get a good handle on it?
Okay, let's start with the foundation. So Etsy is an American e-commerce company. They really focus on, handmade items, vintage things, craft supplies. It's essentially a global platform connecting buyers and sellers. Handles transactions, payments, listings, and they offer optional services for sellers too. Now, what seems particularly interesting is they also own Reverb, that's for musical instruments, and Depop for fashion resale. That diversification, it feels like a really significant part of their plan.
It's quite strategic. You see, while the big platforms often focus on mass-produced goods, Etsy, while they've carved out this strong position, unique, creative items. And acquiring Reverb and Depop, that's not just about expanding reach. It's about tapping into marketplaces with, really dedicated, enthusiastic niche communities, musicians, fashion lovers. That could lead to some interesting synergies, maybe in marketing, platform development. And it definitely broadens their scope beyond just the core handmade and vintage stuff.
Right. So building on that, what about their recent performance? And, financial health generally. We don't have the specific stock price charts in front of us from your info, but we know Etsy's stock tends to move with consumer spending, e-commerce competition, and, well, how innovative they are. There are reports of strong revenue growth recently. That probably connects to that unique market spot and Reverb and Depop kicking in.
That revenue growth is definitely something to track. Suggests a positive trend in their main operations and those acquired platforms. But, it's important to look beyond just the headline strong revenue growth. Getting into the specific financial details, that's what gives us a clearer, more insightful picture of their actual financial well-being.
Okay, let's dig into their strengths then. What makes them stand out? That unique focus, handmade and vintage, it's a clear differentiator in what's a very crowded e-commerce space. And like we mentioned, buying Reverb and Depop brings significant diversification into related markets.
And that market position does more than just offer different products. It fosters a community, buyers and sellers, who really value that individuality, creativity. That kind of loyalty is powerful. And the diversification, yeah, it's smart. Lets them talk to different groups, different interests within the broader online world.
Okay, but what about the flip side? The challenges. It sounds like they face increasing competition from, well, the giants, the bigger e-commerce platforms. And their success seems pretty tied to consumers staying interested in unique handmade goods. Those feel like potential headwinds.
That does raise a good question about, long-term sustainability. Can Etsy keep its special appeal if, say, bigger platforms start building out their own handmade sections? And how resistant is their niche market to shifts in consumer spending habits? Those are critical things to watch.
So thinking about market sentiment, how people feel about Etsy and who they're really up against. Generally, the feeling seems positive, probably because the brand is well known and they dominate their niche. Competitors. Amazon Handmade, obviously. eBay for vintage, collectibles, and Poshmark, competing with Depop. Sounds like Etsy's brand recognition and that loyal community are real assets there.
Absolutely. Brand strength and community loyalty in e-commerce, you just can't overstate their importance. It drives repeat business, attracts new sellers. And while giants like Amazon and eBay have massive scale, Etsy has built this very specific identity that clicks with a certain market segment. Poshmark's social selling focus, that's an interesting dynamic for Depop to navigate to, both a challenge and maybe an opportunity.
Looking ahead then, what could move the needle? Seems like watching their earnings reports is key. Good results could boost confidence, new product launches, new platform features, those could be catalysts too. But on the risk side, potential regulatory changes in e-commerce, broader market conditions hitting spending, and of course that ongoing pressure from competition.
It's that interesting mix, isn't it? What they can control versus what they can't. They can push product updates, platform improvements, but they're also subject to wider economic trends, regulatory shifts. Investors will definitely be watching how well Etsy handles those potential headwinds and capitalizes on any opportunities.
We do have some specific recent developments from early 2025. Etsy was set to announce its Q1 2025 results on April 30th with a webcast. That date's just passed. They also appointed a new chief technology officer, Rafe Colburn, back in March 2025. And they've apparently been rolling out new tools for sellers, better listing stuff, photo editing in the app.
Those are definitely points worth noting. An earnings report is always a key moment for a public company, gives insights into recent performance, their outlook, and bringing in a new CTO, that signals a real focus on technology, which is vital, absolutely vital in e-commerce today. Plus, new seller features can directly impact how attractive the platform is, how efficient the marketplace runs.
We don't have the market's reaction to this news right here, but typically, earnings and big leadership changes like a new CTO, they tend to get investor attention.
Generally, yeah. The market reaction to earnings depends on whether they meet, beat, or miss expectations. A new CTO appointment is often seen positively, suggesting commitment to innovation, long-term platform growth.
Let's zoom out a bit to the industry context. Etsy operates in a really competitive e-commerce landscape. It's constantly driven by digital marketplace growth, changing consumer habits. Their niche helps, provides some shelter maybe, but continuous innovation seems crucial to stay ahead of players like eBay and Amazon.
Looking at that bigger picture, it's clear that even in a niche, you can't just stand still. The e-commerce world moves fast. Companies like Etsy have to constantly adapt, changing tastes, new tech, just to keep their edge.
Now this is interesting. The material mentioned that recent sentiment among sellers on Etsy have been somewhat mixed, some worries about sales declining, and a feeling maybe the platform prioritizes shareholders too much. That's something to keep in mind, sort of an undercurrent potentially.
That really highlights a critical balancing act, doesn't it? Between the platform's growth goals and keeping its seller community happy. If sellers feel their needs aren't met, it could, over time, impact the quality and variety of what's actually on the marketplace.
Okay, let's look closer at some numbers from 2024. Etsy's consolidated gross merchandise sales, that's the total value of stuff sold across their platforms, hit $12.6 billion. The main Etsy marketplace was $10.9 billion of that. Reverb added about $918 million, and Depop around $789 million. So while there's been growth over recent years, the data suggests maybe a slight dip in GMS more recently, attributed to economic pressures.
What's revealing there is how the GMS breaks down. Etsy Marketplace is still the giant, but Reverb and Depop are clearly significant contributors. They're becoming increasingly important parts of the whole business. And that mention of a recent slight GNS decline due to the economy, it just underlines how sensitive this kind of discretionary spending can be to, well, macroeconomic shifts.
What about profitability and debt? In Q4 2024, Etsy reported a big jump in net income, up 56%. That sounds great. However, the reports also indicate Etsy carries quite a bit of debt. High debt levels, that could be a risk. So while return on equity might look strong because of profits, that high debt and potentially negative equity mentioned could affect how we view that metric.
This brings up a really important point for anyone looking at the company. A big net income jump is encouraging, definitely. But high debt, that needs careful scrutiny. You need to understand the context of that debt, how it might affect their financial flexibility down the road, their overall risk profile. That relationship between profit and debt is, well, it's a key thing to keep watching.
Let's circle back to their competitive edge for a moment. It seems to boil down to their unique brand identity and having a cost structure that supports running the marketplace efficiently.
The brand strength lets them build that customer loyalty, maybe even have some pricing power within their niche. And keeping costs efficient, that's just fundamental for staying profitable and competitive long term.
And considering leadership, Josh Silverman's been CEO since 2017. He's overseen a period of pretty significant growth, the big acquisitions. And that recent CTO hire, as we said, signals a continuing focus on tech.
Consistent leadership, like with Silverman's tenure, can provide stability, a clear strategic path. And adding a new CTO just underscores how critical technology is going to be for their future strategy and growth.
Okay, finally, valuation and risks. We don't have specific PE or price-to-book ratios here, so direct valuation comparisons are tricky. But the high debt levels we talked about, potential negative equity, those are flagged as significant risks in the sources, alongside the usual suspects, economic downturns, competition. Also worth noting, Etsy doesn't currently pay dividends. Their focus is clearly on growth.
Right. Not paying dividends is pretty standard for companies prioritizing reinvestment for growth. But that substantial debt, potential negative equity, combined with economic cycle risks, competition, these are all important factors for anyone thinking about Etsy to weigh up very carefully.
So let's try to wrap this up. Etsy, they've carved out this unique space, right? Handmade, vintage focus. Expanded strategically with Reverb and Depop. They face competition, economic pressures, no doubt. But their strong brand, that niche market, those are definite advantages. The recent CTO change, the earnings report we just missed, those are key developments to keep tabs on. And the mixed seller sentiment, the high debt levels reported, also important context.
What's really fascinating here, I think, is that tension between Etsy, the unique community-focused marketplace, and Etsy, the publicly traded company, facing all the pressures of a competitive landscape. Which leads to a pretty significant question for you, the listener. How do you weigh the appeal of a leader in a specific niche against those potential risks, competition, economic uncertainty? Especially when the sentiment within its core seller base seems, well, divided. It's definitely something to ponder as you continue looking into Etsy.
And if you found this unpacking helpful today, please do subscribe, like, and maybe leave us a comment. We always appreciate hearing your thoughts.